This is Alan Bush with ADMIS with the Financial Futures Forecast for Thursday, April 9th. Starting out with the stock index futures, we are seeing prices just mixed this morning. Apparently there were no surprises in the release of the minutes from the most recent Fed meeting yesterday, although some on the committee believe that the Fed should raise interest rates at the June meeting. However, there were others that thought a rate increase would not be warranted until next year. Also, we did have Alcoa earnings yesterday. Looks like they were somewhat mixed as far as earnings and revenues. Also, we are still believing that the main trend is higher for all of the major stock index futures, since we do believe that the Fed will be raising rates later rather than sooner. Also, even though earnings are likely to show declines over the next 3 quarters, our feeling is that any weakness in earnings and any economic weakness as far as overall reports will be met with more accommodation from the Federal Reserve. So we have to remain bullish long-term on stock indices overall. Now, moving over into the foreign currencies, the dollar index advancing again. However, we continue to believe that the dollar index is topping and that economic growth here in the U.S. may be slowing. At the same time, it does look like the Eurozone economy has turned the corner, and we would expect economic numbers in Europe to overall come in better than expected. Now, we did have the Bank of England leaving interest rates unchanged as expected, keeping their main interest rate at a record low 50 basis points. Also, we are feeling if the dollar is topping in here, that industrial commodities are probably in a bottoming phase, and that would bode well for the commodity currencies, being the Australian dollar and the Canadian dollar. And I think we'd have to like the Canadian dollar a little bit better than the Australian dollar, since there is a fairly good chance at the next Reserve Bank of Australia meeting that they may cut interest rates. So I think a better long in here is the Canadian dollar to be bought on any weakness. And over in the interest rate markets, we have the last of the 3 auctions scheduled for today, and that'll be the 30-year bond auction today. The Treasury this week is auctioning $58 billion overall in securities. Also, the probability of a Fed rate increase at the October meeting now has fallen to about 49%, according to financial futures markets. And if you recall, it was as high as 87% in early January. So the possibility of a rate increase in October has moved out quite a bit. Longer term, we still feel that 10 and 30-year issues remain in a bull market, and any weakness in 10-year notes and 30-year bonds we feel should be used as buying opportunities. So good trading, everyone. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.